All right, so this is Charles Allen of Blockchain Technology Consensus Solutions, or BTCS. This is the Redchip Fintech and Digital Asset Treasury Virtual Investor Conference. We will begin with Charles's presentation in just a moment, and then we're going to open up this event to your questions. Your lines will remain muted. However, you can submit your question at any time by pressing the Q&A button at the bottom of your Zoom window and then typing your question into the resulting text box. Let me get the safe harbor statement out of the way, Charles, and then you can launch. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Charles, that's it. Please go ahead.
All right, great. Just give me 1 second and I will share my screen so we have the PDF up. So I'll just jump right in. We've got our safe harbor. I guess we don't need to do that. Thank you, Redchip, for doing it. So BTCS, for Blockchain Technology Consensus Solutions, we're the oldest public crypto company in the world, which is really cool. Obviously, some of the data in this deck is a bit dated with the current market pricing, and I'll talk about that a little bit later. But I think some key things to focus on is we're an Ethereum first focused company executing a very unique strategy in the markets. We have high insider ownership. As far as some of the other public companies that are focused on Ethereum, I think we're highly differentiated, and we're showing phenomenal revenue growth over 2025. So obviously Ethereum's been one of the best performing assets since 2016. Clearly, we're in a bit of a pullback, but that's not something we haven't seen in the past. I think there's while there was general consensus that the 4-year cycle is over, we're starting to see maybe that's not the case, as both Bitcoin and Ethereum have pulled back in the recent month or so. So just taking a big step back and looking at the value proposition of Ethereum, and I think this is really fundamental to our story. It's much greater than the price of Ethereum. We've been in this space for well over 10 years, and the thing that we've seen in the last year or so is the regulatory environment has dramatically changed, and institutions are willing to build products and solutions in this space that's going to allow for the tokenization of real world assets. And I think that is fundamentally game changing, as much as the internet was for the movement of information. The tokenization of digital assets will allow 24/7 trading and expand markets. And that's something that we're just starting to see build, and the majority of that building is happening on Ethereum. So despite the recent price declines, which we believe are macro driven, the overall value proposition of Ethereum and the institutional interest has not gone away. And I think that's something to really remember as we think about what pullback in the market looks like. So taking a look at kind of ways you can get exposure to Ethereum. 1, you can go buy an ETF. 2, you can do a digital asset treasury. And 3, there's BTCS. And I think where we're fundamentally different is, as opposed to just getting a 1-for-1 ETH exposure or just yield, we have integrated operations, and we have a DeFi and TradFi capital formation strategy that's going to limit dilution. And the integrated operations, I think, is really what we're looking at, is to drive a high growth, high revenue, high margin business that is going to perform better than just holding an underlying assets. And that's really what we're building BTCS to be. So how do we do this? Really, it's the DeFi, TradFi, accretion flywheel, and we access capital through strategic capital raises, whether that's on using DeFi or our ATM, or we've done some convertible notes. And then how we deploy that's really interesting. So we have the block building, which has been the biggest revenue driver in 2025. Staking, which is a relatively boring business in the grand scheme of things, where We actually run up our own nodes, which is great. It increases our yield compared to many of the comparables. But what we're really focused on for 2026 is Imperium, and that's where we believe we can see the same potential revenue growth that we saw in Builder Plus, but with a much higher margin. And so looking at these three businesses, Builder Plus is basically buying block space from validators and filling those with transactions that we can find. And that is, every on Ethereum's blockchain, every 12 seconds, a new block is proposed for inclusion, and validators sell the majority of the validators sell their block space in an auction to the highest bidder, and we'll bid for those blocks and then go get the order flow to create those blocks. That's been the main revenue driver in 2025. Node Ops is solo staking, and we also run nodes for Rocket Pool. We do this ourselves, so we're not paying fees to third-party providers, which means we're more efficient than many of the others. In Imperium, and this is where we're really looking to be the focus of 2026, as I noted in our shareholder letter, is participating in on-chain DeFi markets, being a liquidity provider, and we see this as the growth engine for 2026 and something that we've been leaning into, especially given the current market conditions. So what is our kind of snapshot from a financial perspective look like? You can obviously see for the last 3 years, revenue's been growing phenomenally. 2023 is 1.3 million. 2024, we grew to approximately 4 million, and we put out unaudited revenue numbers earlier this year for 2025, and that came in around 16 million. So, huge growth. And you can really see the breakdown of what that revenue looks like on a quarterly basis, where we've moved operations or focus away from Node Ops, where we don't see the same scalability, to Builder Plus and now Imperium, really moving in Q3. And we plan, as I've mentioned before, to really lean into that initiative, as we believe it's going to be similar, if successful, similar revenue trajectory that we had in Builder Plus, but substantially, higher margin, which is the goal. Obviously, apart from the last month, our market cap and price have done quite well. We're optimistic we deliver on the operation and executional side of putting out strong numbers. This should recover, especially with a favorable macro environment. I mean, right now we're just kind of suffering from that. So I'm going to touch a little bit on the ways we funded the company. We've used our ATM. We raised in 2025 about 140 million. We've done about over 3 million in stock buybacks out of a 50 million plan. And we've used convertible notes, which are 40% less dilutive than the ATM, assuming full conversion. So that's kind of a snapshot of how we're funding the business. We believe that being strategic in how we access the capital markets to limit dilution, which can be very toxic for many microcap companies, is a key component of our strategy. So just kind of having a quick look at our Ethereum holdings, we've substantially grown. In Q3 of 2025, we raised 80% of all the capital that we have in the last 10 years. So it was really a phenomenal quarter. Up until then, the market was not favorable to us. The liquidity in our stock was not as high as it is today, nor was the price. And so we decided that dilution was not in the best interest of our shareholders, and we're very conservative with how we access the capital markets. And that's resulted in a huge jump in our balance sheet, even with the recent declines. So just looking at how we have compared to our peers, I think we've done even with today's prices, I think we've done pretty well compared to many of the peers that have pivoted into this space. And I think that's primarily driven by the fact that we have an operating business far in excess of our balance sheet size. So just a quick snapshot of the financials here. You can see these are obviously as of Q3 because we haven't put out the Q4 results yet. We did indicate that we did about 16 million in revenue. So that's around 6 million for Q4. typically we've seen the first quarter be a weaker quarter in light of the market conditions. That could be expected, but again, we're only 1 month into Q1 2026. So very clean cap structure. We have convertible debt that it totals about 17 million, so not huge in the compared to the size of our assets. Warrants, these have no toxic features. They're cash only exercise. And employee stock options is pretty standard. So very clean capital structure. I note our Series B preferred stock is basically equivalent to common shares, and it was issued to all of our shareholders some years back. So that is it's not sitting in the hands of a toxic fund. And so that's kind of the cap table. As far as the team, I'd say we have an amazing team, both from on the leadership level as well as down on the employee side. They need to give them recognition where it's due. So our DevOps is headed up by Ben Hunter, who's now actually our Chief Technology Officer, and Michael Provoznik, our CFO, and we have a great board as well. So I think with that said, I know I've gone pretty fast through this presentation. I know many of the participants are familiar with the company. We have growing revenue. We're scaling operations. We've doubled the size of our team in 2025. Despite some macro headwinds, we do have very substantial regulatory tailwinds, as I mentioned earlier. And I think the market is really primed for adoption in blockchain technology, and we sit at the infrastructure level, right? We're not making bets as a company that a certain product or service will survive. We're operating at the infrastructure level, and so it's really generating scalable revenue within the Ethereum's ecosystem and economy. So I think with that said, and I know I've gone very quickly, there's probably I want to leave a substantial amount of time, for at least half the time, for questions, and so I'll open it back up.
Thank you, Charles. What an enlightening presentation. We have many questions already because people have been pressing that Q&A button and typing in their question. That's at the bottom of your Zoom window. Charles, number one, can you talk about BTCS's unique crypto strategy and how it differs from all the other public crypto companies and the traditional DAT approach?
Yeah, so I don't really view BTCS as a DAT. If you look at what happened in the summer of 2025, there was dozens and dozens of companies that said, "Hey, let's just go buy crypto and put it on our balance sheet," and the stock would spike because they were doing a huge pipe into like a sub $10 million market cap company that was basically a zombie shell, despite not technically being a shell. And there really isn't a business of let's just buy crypto and hope it goes up. That's not a business plan. I think that kind of played out in the summer of 2005, and it's not coming back. We've had a plan of we want to be building a scalable business from in a couple key components that we can integrate together, vertically integrate, and build a sustainable business. And we've been doing that since 2020 on the Ethereum side. And so we didn't pivot into the space like many of the others. And I think we're much further ahead in terms of building out within the Ethereum ecosystem via Imperium, Builder Plus, and even the staking. We don't use third-party providers. And so I think that's what really sets us apart, is we're an operating business as opposed to a Ethereum proxy.
Charles, why ETH? There are many crypto assets, of course, and what separates Ethereum from the other technologies? And of course, why is it foundational to your strategy?
Well, I think, look, I wouldn't view us as ETH maximalists. We're going to pick the blockchain that we feel has the most potential for success and disruption. And when we initially started in the crypto space, Ethereum didn't even exist, right? It was just Bitcoin. And while I like Bitcoin fundamentally, apart from having a first mover advantage and name brand recognition, the technology is much weaker than what Ethereum does. You can't really do much with it. And so when we look at Ethereum, it's where most of the developers are building, it's where most of the real world assets are getting deployed. And the next technologies, I mean, if you look at Solana, yes, it's faster, but it doesn't have the same record of uptime. And so it's the most established blockchain. It's never gone down in 10 years, and that's where the money is flowing, and that's where people are building. And so it seems that it's the best place to be focused than an up and coming new technology that may not get market awareness, may not get market adoption. And if it doesn't get to scale, it doesn't really matter. So I think that's where Ethereum's been a great place to focus for us.
Charles, when you think about BTCS's financial statements, what metric are you primarily optimizing for? Is it revenue, net income, ETH per share, or is it something else? And how does all that guide your capital allocation decisions?
So really, it's revenue and net income. I think are the key things. Given the size of the company and the scale, we haven't really been focused on net income. There's a lot of non-cash charges. EBITDA is something we look at, and so I think first and foremost, it's been driving scalable revenue. I think if we're able to deliver that, the market should take notice. And further, as we look to pivot more into, or not pivot, but more shift our focus to Ethereum, as we've already built out Builder Plus and Node Ops, trying to increase the margin. With the ultimate goal is we want to get to a point where our operating activities far exceed our operating costs. Right now, whether that's denominated in Ethereum and we have to convert, I mean that's the goal. And we've been very conservative in how we approach that. And so those are the metrics we really want to get to. I'd like to get to a point where we don't need to access the capital markets unless we want to. We're very close to that. We don't need to now, but we do have access to multiple, funding sources. So I think really to kind of come back to your question, it's high growth revenue and high margin revenue. And then, once we get, to a point where we've proven that out, we can kind of focus on net income and some of the other non-cash charge, expenses, or really look at EBITDA, adjusted EBITDA.
Charles, as you well know, there have been major industry tailwinds around Ethereum, stablecoins, and Web3 adoption. How do you see the regulatory and institutional developments shaping your go-forward opportunity?
I think it's very positive. Right now, we have the Genius Act that passed last year on stablecoins. I'd love to see the Clarity Act come to fruition. There's been a lot of discussion on whether you need to be whether you can charge or pay interest on stablecoins. That right now that's still moving through Congress. I think that'll be probably one of the biggest catalysts that could snap us out of the recent pullback. But the government just takes time. At least it's on their radar. It's important. There's been a lot of lobbying to move things in the right direction. And so I'd rather see the right regulation come out than the wrong regulation. If that means it takes longer, that's fine. But I think that's a huge tailwind for the industry. And it really is bipartisan at this point. It doesn't help when the government shuts down and these things get delayed. But overall, I think that's a huge industry tailwind that we didn't have for 10 years. So we can talk about this cycle and the pullback in prices. We've never had these tailwinds. The tailwinds we have right now from a regulatory standpoint, for the better part of the last decade, apart from 2025, it was all headwinds. It was 10 years of headwinds with cycles. Now we have a tailwind from the regulatory standpoint, and we just have some macroeconomic, and environmental issues that are driving the risk-off approach at the moment.
This person wants to know, why shouldn't BTCS be viewed as a DAT? And when you think of the different digital asset treasury models, Bitcoin focused, ETH first, and multi-asset. Where do you think the industry ultimately settles over the next 5 years?
Well, I think what's going to happen is if you're going to start a company and your sole purpose is I'm going to go buy Bitcoin, I'm going to go buy $100 million in Bitcoin, it's really a bad business because you generate no, especially on the Bitcoin side, you generate no revenue, right? It doesn't have staking, and your cost is got to be competitive with an ETF. Moreover, if you use other tools like leverage or other things that you can do as an operating company versus an ETF because you structure it as a DAT, your company is going to be a hedging mechanism for smart hedge funds, right? If your stock's above NAV, they're going to short your stock and buy the underlying via an ETF or vice versa, right? So there's not much that you can do to really generate shareholder value because you're just a hedging tool and you're just a pair trade for a bunch of really smart hedge funds. And so I think to break out of that mix, you need to deliver and you need to deliver with operations. And so I think that's how we are substantially different than most of the DATs. We didn't pivot into this market. We're years ahead in terms of understanding how these things fit into an accounting framework. We're years ahead in terms of what are the different business models you can go into within the Ethereum ecosystem and economy. We've had our feet wet being public. We're not, I didn't start out as the CEO of a private company and now I'm running a DAT and I don't know anything about the public market. So from that perspective, I think we're really far ahead. And as we lean more into Ethereum and or Imperium and our operating side, I think that's going to really show in the numbers. And if you look at our revenue for 2025, like 16 million is far in excess of most of the other DATs that are, multiples our size. And so if we can deliver the revenue and then work on improving margin over time, that's a much better narrative than, hey, I bought a bunch of, ETH or Solana or whatever the token is, and I'm hoping it goes up. And that's the only, hedge funds are going to play with your stock for a pair trade. It's not really a good plan.
You mentioned Imperium, Charles. This person wants to know how Imperium fits into your 2026 plans and what's your focus for 2026?
I think that's our big focus for 2026. 2025, we really focused on getting the block building going. We still need to improve the margins there. But what we're seeing so far with Imperium is if we can get that same scalable revenue growth and have high margins similar to staking, assuming that we can do that. And obviously, I can't provide any assurances or guarantees that we're going to be able to execute on that plan. That's a much more compelling business line, and it could vertically integrate with the block building. There's a lot of ways we can integrate those two businesses, so everything kind of becomes interrelated within the Ethereum ecosystem and economy, and we can start looking at layer twos, and it gets pretty interesting in terms of how we can create value for our shareholders. So I think to kind of come back to your question, 2026 is going to be the year of focusing on the Imperium business line.
Can you elaborate on your use of Aave for borrowing and how you assess risk, collateralization, and liquidity buffers?
Yeah, so we've obviously borrowed on Aave. We borrowed stable coins, and we've put up as collateral against that loan Ethereum, which actually earns in ETH. And the main way we address risk is in twofold. One, we make sure that when we enter the positions that our loan to value ratio is not is extremely conservative, so that when there is market pullbacks, we're not at terrible risk of getting liquidated. Right now, I think our liquidation price without any changes or rebalancing is in the mid 1400 range for Ethereum, as well as so that's kind of one. And then two, we've made some shifts recently to make sure that some of our Ethereum is in higher revenue generating, higher margin businesses like Imperium, and that it's not that we have liquidity. So we do have a lot of Ethereum outside of what we have on Aave. So it's just balancing what exposure do we want to have and what's the risk tolerance, and making sure we do that in a responsible and conservative way.
What are some upcoming milestones investors should be looking out for, Charles?
So I think the big things we have coming up, and obviously we're going to file our 10K. That's given all the developments in 2025, we don't anticipate getting that out early. So that'll be for probably up against the March deadline. So I think that's something investors will be able to see the full numbers in the balance sheet. Obviously, can't talk about those until they're out. And then I think for the rest of 2026, our goal is going to be to deliver on the numbers. Typically Q1 is weaker, but if we're able to be successful in our endeavors with Imperium, it'd be great to show strong revenue and strong margin improvements. I think that's the biggest thing. I mean, we're always looking at integrations and partnerships and other things that we can have announcements on, but when it really comes down to it, what do investors want to see? They want to see growing revenue, and they want to see a strong financial picture. So that's our hope, is that we can deliver that in 2026.
We got about 2.5 minutes left. Charles, final question for you. Why should anyone care about BTCS right now?
Well, right now, I think it's one of the most interesting times, right? If you just look at what's going on in the market, everyone's going to point to the price of Bitcoin coming down, the price of Ethereum coming down. There's and obviously, I can't guarantee or sure that this is the bottom, but it feels like we're getting to a low. So it could be a really interesting entry point, based on market prices. So fundamentally, there's not much that's changed with the business. Obviously, if the price of Ethereum comes down, our balance sheets, the value comes down as well. But from what we're doing on an operating side, it's the best place we've been in a very long time. And so it creates an opportunity, I think, right? If you when everybody else is panicking, is usually a good time to enter. When everybody else is gleeful at the top of the market, it's usually a time to take some chips off the table.
Thank you very much, Charles, for that enlightening presentation and for answering all the questions. For more information on blockchain technology consensus solutions, you can always call us at 1-800-REDCHIP. You can email us at btcs@redchip.com. Thank you again, Charles.
Yep, thank you so much.